Hey guys, how's it going? Welcome to the session recap for both London and New York on the 30th of June 2022. So, as we know, daily has been in a bearish swing range for quite some time between the swing high and the swing low. We pull back to premium supply, so very simply, we expect what do we expect? We expect price to continue and take out the weak swing low. However, we did have somewhat of a sizable pullback here, so I know some of you counted that as swing structure, which is absolutely fine. For those who don't, same way as me, that's a significant piece of internal structure, which essentially means when we've come down into here, that this is a strong internal low. So it's both a weak swing low, but a strong internal low. So when you have that misalignment between internal structure and swing structure, it can get a little bit confusing because we're not quite sure whether or not this strong low is going to hold and we're going to get that next bullish internal leg to the upside, or whether the swing structure is going to take precedence and continue the overall move. So remember, if you need it in an order of importance, swing structure is always going to be the strongest. Also, adding to the fact of the bearish case is the amount of momentum after mitigating this premium supply. We obviously came down with a ton of momentum. We initially reacted off this low with a decent pullback, but it's been very, very corrective for the past week or so, right into this level. And then what happened yesterday, as we saw a reasonably aggressive sell-off, right, compared to the last week's worth of price action, where we've seen a couple candles there selling off pretty aggressively. So that would kind of add to the case that we're seeing that sell-off now had a little bit of a pullback just to generate more liquidity to then continue and take out those lows. So if I'm being honest, my bias really for today was that move would continue, or over the next few days or into the start of next week, we're going to take out these lows, and we're not going to see that internal higher low to continue that movement. That was kind of, I guess, my overall bias with how everything was setting up. But that impulsive move down, correct the pullback into supply, and then another couple of sharp days selling off there. But when we go down to the lower time frames, what do we have? Well, the 4-hour chart was bullish, right? At least if you map it the same way as me, where we had this swing pullback here and then we switched bullish. We spent pretty much most of this week, and I guess some of the last week, trying to take out that weak 4-hour high where we had an initial attempt here, swept the high, retraced aggressively, and then we swept both this high and this high, right? We failed to close above, so we never got a swing 4-hour breakout structure. Just very, very corrective. And then that's when we got that mitigation into supply, and we started to see that aggressive sell-off for the previous 2 days. So that's kind of what added to my bias, that potentially this mapping of swing structure was a little bit too tight, and in the back of my mind I was thinking maybe this is more of an I boss than a swing boss, and therefore you could view that as one 4-hour swing leg down, that as the 4-hour pullback to premium supply, and now we're ready to take out this 4-hour low. Excuse me. So that was kind of, I guess, what my main bias for the day was that yes, although I'm still mapping this as 4-hour being bullish, I'm kind of viewing the larger structure as bearish, and especially with the way in which we came into here and we sold off aggressively, I didn't think that there was a decent chance this was going to hold. But maybe that's where you're bringing unnecessary complexity and biases into into it when you can just keep it nice and simple. I.e., the point I'm trying to get is this is a 4-hour strong swing low, that's a 4-hour weak swing high. We've now pulled down into this extreme level of demand, right? So this becomes a pretty good level in order to look for longs to catch that 4-hour higher low to continue to the upside. But all that said, right, what's the other thing that we can think how we can keep things very simple is whether you view this as bullish or bearish, right? Depending if you view it that way or if you view it as price switching bullish here. This is an extreme level of demand, right? And it's always going to be an area in which we're most likely to see decent reactions from. It's the highest probable area to be looking for longs, right? We want to be buying at the bottom, we're going to be selling at the top. So yeah, this would have been a pretty good level to potentially get aggressive on the lower time frames and try and catch that long. And also, as we've come into here, you don't really want to be trying to short, especially as price is rejecting the extreme of this extreme level or extreme demand, right? Trying to sell in here, it's forcing it, right? You can't be surprised if you take losses from within here from average POIs. You're literally selling against a mitigation, literally the extreme of a 4-hour demand level, especially if you have this as your 4-hour being bullish as well. So this was basically the New York move coming off that extreme level and moving to the upside. As we came into London, price had only just tapped into this level here. As I said in my markup, right, I'm more than happy to look for longs from here in case that does become the higher low, but I'm very aware it could just be a short-term bounce to come into this level to continue down. So that's really kind of what my idea was coming into London. I was looking to play Just get my pen tool. I was looking to play basically a quick move from here up into this level of supply with the potential that we could break up higher, especially as we jump down to the M15. I'll take a look at how that approached for London. So, well, let's kind of look at the swing structure, right? Because we were in that massive swing range the last week or two between this swing low and the swing high. We eventually got that break of structure on the 27th, so 3 days ago. And then since then, we had that bearish break of the internal structure, and we were just selling off very aggressively, right? We had nice, clean internal swings. And then yesterday, after New York, we just got that bearish break of structure. So coming into London, the swing range was, again, very, very massive because it was basically from this low all the way up towards this high, which is pretty damn big. But what we can do to be a bit more accurate and be a bit more relevant is zoom in and look at the larger internal structure that we're working with. So really, this is kind of the main range I was paying attention to coming into London, and just looking to play a pullback, up into around these supply levels to then potentially look for, or ideally look for that lower high as we come into one of these decent levels. And that's pretty much the simple framework we're looking for, right? We've come into that 4 level of demand. The M15 trend is bearish. The internal trend is bearish as well. We've had a little bit of, we had a nice sweep into demand. We had a change of character. Arguably, that's a small, internal breaker structure as well. So let's talk about this, right? Let's talk about, how, again, I think it's good to go over how we view the internal framework and the internal structure with regards to swing structure. So let's go back to basics, right? We've had a bearish break of swing structure here, right? This being the swing low, we get a break of swing structure. So what do we expect after a break of swing structure? We expect a swing pullback, okay? Now, within that, we have the larger internal structure, right? So we have these big movements here. We had that break of internal structure, then we had a pullback, another break to the downside, pullback, and another break to the downside. So that bearish internal run has essentially done its job. So now as we come into this 4-hour level of demand and we've had a break of swing structure, we're now expecting a sizable swing pullback. But we can keep it pretty simple and just go, right, this is the current sort of larger internal range we're within, and we can look to play the pullback, the internal pullback into this level, wait for that to then switch bearish, right, to then catch that next lower leg potentially to take out this weak internal low. Okay, so that's the larger structure, and in order for that larger internal structure to have that pullback, what is going to happen? Well, you're going to get smaller structure that will then switch bullish to facilitate that orange pullback, right? Which is essentially what you have here, where we get that break of the low, then the break of the high, right? And you have that green structure switching bullish to facilitate that orange pullback. So that's what essentially, if I zoom in a bit, I was looking to trade in London. I was hoping, because I think Frankfurt opened around here, I was hoping price was just going to come down into this nice sweep zone, catch a nice little long within here, push us to the upside and take partial profits along the way, right? So getting a bit messy as we get that green bullish small internal trend to the upside, wait for that to switch bearish, so you get a small bearish IBOS, and then once that happens, then what do we expect? Then we expect the orange pullback is over, the large orange internal pullback is over, because then the small green structure has now aligned with the slightly larger orange structure, right? And then we can do what? We can expect these small green ranges to hold until it takes out that weak low, right? The start of that orange leg. And that's essentially what we're doing, just using the fractal nature of the market in that way. So yeah, I was actually kind of quite excited as this was setting up pre-Frankfurt because it was looking super clean. We'd come into the 4-hour level of demand, nice sweep of liquidity during Asia, come up into this level, zoom in again a little bit more, reacted to supply, failed to put in a lower low. Then we had that choke to the upside, which is basically that small IBOS as well, which is decent. Right, clear bullish momentum. Just gonna zoom in. Giving us a very, very nice flip POI, right? So I was hoping price was going to pull back into here, where I was then going to look for a long to then, like I said, take it up towards these levels. So we pulled back, moved up a little bit, so then this creates another little low here. We came down and swept the liquidity below that low. And then at this point here, as we aggressively retrace on the M1, I was looking for a kind of aggressive entry within here, okay? So this is a little bit more advanced, but essentially all it is I can see momentum, especially as it's kind of timing up the session open. Right on the session open, we come up, we pull up like this, we just sweep that low, and then we got an aggressive retrace. And I know price isn't always going to want to pull back, so this is where I was looking to try and get involved in the trade, just kind of for a quick movement up towards this next level of supply. So let's take a quick look at the M1 before we kind of go over any further. And here we go, right? So ideally what I was waiting for was after this nice sweep, big impulse to the upside, ideally looking for price to come down into this level, right? We have some refined M1 POIs as well, I was looking for it to be hit, looking for M1 to come in and give us that entry model, and then boom, I would have been more than happy to take that. However, when you see these big lows like this, especially a low that did what? It caused a high, that little M15 high there. Price then comes down and sweeps it, comes in and mitigates this level of demand. And then really what kind of gets me massively interested as well is the momentum time with the session open. So this is like bang on basically Frankfurt. We've had that sweep, we've had a decent push to the upside. So I was kind of interested to see, could we get the movement there? It's a lot more aggressive. It's not something I was in love with, especially as it, it could have been rejecting the top of here and then came down lower. So I didn't set any orders, primarily because I would have only been interested really in the extreme at this point. And the reason why is because we have this initial chalk up, right? It takes the high, and obviously we have this supply zone here, but this zone is not a flip zone, right? Why is it not a flip zone? Well, it doesn't react to anything, right? This is where we pull back from, we react, but if we look left, right, there's no pivot zone here on the M1. So for me, that has pushed, this movement's pushed straight up through supply. This supply zone has failed because price has worked up through it. So this is not a flip zone. It's simply just a structure zone, right? Just because it breaks structure. It doesn't sweep any liquidity, it doesn't have any inducement, and actually it's already been mitigated, it's already been tapped into, because you can see when it was created, price push up. At this point you have a demand zone, all right? But then what happens, price comes in, fills up some of those orders, and then continues the move, right? So it doesn't mean that you can't trade from these areas or you expect price to potentially make a movement from here, but these are just all pieces of confidence as to why I didn't really not see that as a significant zone whatsoever, and why I personally wouldn't set an entry order on here. Potentially, maybe the only way in which I would trade that, right, is if price came down into it on the M1 and then gave you a confirmation entry from that level. But again, I wouldn't have been in love with it because of this move being all the way up, almost rejecting the top of here. Then you could easily view that as a big sweep zone, price pushing down, coming into here to then continue lower. So, although I'm kind of keeping an eye on it, and I can see this, I've seen setups like this before, really I was waiting for price to come down to here, and that's kind of what I was hoping for, and if it didn't, fine, no problem, happy to sit my hands and then look for the pro trend shorts up here, right, from those higher levels of supply. So not really too bothered trying to force it too much in the middle. If it had to come into the extreme, I didn't set an order on it, but I think if it had to come into that extreme and then moved away, arguably that would be a mistrade for me. I wouldn't be too bothered because, again, I'm not in love with it for all the reasons I've just explained. The more point I'm trying to make here is that for me wouldn't be a POI in this instance, in which I'd be happy to set an entry order on. It's just far too aggressive considering the overall setup. I want to see something a little bit more high probability on the M1 for me personally. So then we started to move away pretty aggressively. So we hop back to the M15 to see where we're at this point. So that is this movement here, and then we continue to the upside. Now, this level of supply that ended up holding is obviously one that we're aware of. We had it on the markup, this M15 sort of demand range here, but it's quite low in the leg. There's no inducement, it didn't sweep anything, it didn't really flip anything. There's a bit of a wick over here. It was basically rejected this, but it's already the pivot of that's mitigated. So it's nothing. It's not really that great of a zone, right? It's just a structure zone. It broke some structure here, and obviously it ended up leading to that break of structure there. So the way I was expecting it, or what typically happens, is these sort of lower levels of supply typically just provide a bit of a pullback. So what I would have expected with that smaller green structure is that movement upright, pullback, movement up into here. And then that short from here, it was just what I thought was going to happen was going to provide potentially a move into here, or maybe use this as liquidity and push it into here and then continue that movement up higher. So I'd be more than happy to look for shorts from within here. Cautiously, of course, because it's not the highest probability POIs in the world, but only if I could get in short from within here before price gets anywhere near this range, right? You want to be kind of in straight away in case price then comes in, mitigates this level of demand, and then continues sort of that small bullish internal trend. And that's the way I kind of approach those, let's say, lower probability or less well-priced zones, especially if you don't have the internal structure aligned with yourself in terms of the green structure. You want to be getting in here. You don't want to be waiting for price to mitigate, come down into here, then push up, and then look for the short, because it's a lot lower probability at that point because it's come down and mitigated demand, right? But anyway, it didn't give me the entry that I was looking for. So let's go and take a look at that on the M1. So we came into that level, reasonably clean M1 entry model in terms of we get the liquidation, right? Mitigation, it hit refined M1 level as well. We got that change of character, nice V-shaped reaction down into the significant level of demand, right? Because that would essentially be your M1 almost swing low as well. So really, if you can get this to fail and this go, rather than just trying to, get in against the chalk, right? If you had to try to short from here after the chalk, but price to mitigate this level of demand, it could have very easily just been that. And that's how you can get caught out a lot. So when you see that swing go, really, that's the one where you now kind of have the M1 structure then aligned, and it's a lot higher probability. And you can get in short before what? Before we've come into that M15 level, which was the key point I was just trying to make before. So in terms of the actual entry, how could you got involved? Well, we have the reaction from demand, right? Price comes in, reacts, fails to put in a higher high, and then we push to the downside. So the moment we close below that reaction, you can enter anywhere within that zone. So from the low of the reaction to the top of the reaction. Okay, only once price does what? Only once it closes below the reaction is when you get the failed reaction, because that's the reaction level, right? Now we get the candle closure. So literally at this point, that is then as price pulls back in, you can get short from here. The problem is if you use even a 2 or 3 pip stop, I don't think you would have been tagged, right? EQ there. I mean, you would have needed, if you had it entered on this whole M1 zone, at least 3.5 pips really for you to be tagged into that trade. So this is where if you use lower time frames, you can get it a little bit more accurate. I'll just kind of show you how. Like, let's say you look at the 30-second. I think this is what Alex was looking at earlier today, and you can kind of see that it's pretty messy within here. We've come in, we pull down, right, and then we come down. And at this point, where's the unmitigated POI candle there? Obviously, you have to be aware of something in that wick, but it's not really that clean. So the 30-second helps to clean up a little bit, and then potentially you could have got in with that risk to reward, depending on how you position size your trades, right? 2 pip stop would have got you in. So a little bit messy, a little bit tricky to get in, especially if you weren't kind of using seconds, or if you use a refined fixed 2 or 3 pip stop loss. But you can understand the entry model, right? It's there, everything we've there, that we use. But yeah, there's not really too much I can add to that, and obviously then it absolutely dropped off at that point. But yeah, the key lesson I would want you guys to take away from that in terms of just in general, is that if you get short from these levels where, let me zoom out a little bit on the M15. If you get short from these levels here, where they're quite low down, and it's obviously going to be high probability for price to pull back, especially as we're coming off 4-hour demand. Just be wary of one, your management, but two, where you actually look to get involved. So what do I mean by that is, if you have this green bullish structure, you get in short, you want to be getting in short as almost straight away, rather than when prices come down into this level, because that green trend could continue to facilitate that overall larger internal pullback. Okay, so then it absolutely sold off. So there was no way, if you were looking for M1 entries for the longs, right from here or even from here, it just absolutely smashed through it. So yeah, hopefully at that point you guys should not have taken any losses if you were looking for M1 CEs, right, rather than risk entries. Now after that, obviously it failed on its first attempt to break and close below the swing low. So we have a bit of a sweep. Is this an instance in which I would want to get long? Not me personally. Like, the way we've come back, and then we've had that move to the downside, that internal breaker structure there, tons of momentum, right? There's no bullish chalk. I just had no interest at that point. I wasn't even looking, my London session was pretty much done at that point. I just knew, actually that's a lie. The only thing I was considering was basically if price was going to come up into here, or if we got the break of structure and then we got a change of character, and then I would have been happy to play that pullback. They're really the only two scenarios. Once price swept that, fell to close below, and it's just messing around in here, I'm not interested. It's just not high probability enough for me at the moment. It's unclear. Just let it alone, leave it alone and let it sort itself out. So the reason why I'm still interested in the short, even though this high failed to take out this low, what do we have from an internal structure perspective, right? That led to that IBOS there. So now you have this as your strong internal high, right, with a smaller structure, and then you can look for price to come into here to then catch that low. But unfortunately, I think it was some unplanned news or something, price literally smacked into it. The only way you could have caught that was with an M1 or M15 risk entry within here to then catch that next leg there to the downside. So let's quickly show you that on the M1. So yeah, like I said, when it was doing all of this, literally wasn't interested. I guess one that would have made a bit more sense is when you had the actual sweep and then a big push away, and then obviously you have a nice extreme zone near the bottom. Oops, it's on 30 seconds. Wondering why that looked a bit weird. There we go here, right? You had a big push ups, then maybe you could look from the extreme, but that's a risk entry. Probably personally prefer to want to take a CE, which didn't end up happening, and that's when it shot up. Came up into the level in which I would have been happy to take a confirmation entry short from, but it didn't. Risk entry would have been the only way, and yeah, so that's it. So not the best price action it ended up being in the world. I thought it was going to end up being really nice at the start. It was setting up nicely to play that pullback play. That M1 entry model, to be fair, was pretty decent. It's just you would have needed a pretty wide stop to enter if you took the entire M1 flip range there, right? Rather than kind of refining that on the lower time frames. But you can see the overall setup there was reasonably clean. There's not too much else to add then other than that. And then for New York, we kind of sold off through the London low and came down into the extreme. And this is where, to be honest with you, I kind of just thought, right, this low's toast now. Like, just with the way we've had the overall push down, correct the pullback in, very, very aggressive sell-off. I thought we might see, a bit of a short bounce or pullback, potentially maybe into this level, and we're going to go. Now, just because you can have a sort of bias with logic behind it, again, doesn't mean you have to trade it. Just because, like I could think, right, I don't think this is going to make this move, which ended up happening. I think it's more likely to sell off. Doesn't mean you have to trade it. And why am I saying that? Well, because you still want to be trading in areas in which you have all of the confluence on your side. And like I was saying at the start, right, this is a strong low. You're in an extreme level of demand. Prices come into that extreme level. It hasn't spiked through. The demand level is held, and as prices coming back in, right, do you really want to be shorting from that? Is that high probability? Not so much, right? So that would kind of be my main takeaway from that. Anyway, in terms of the M15, all of these candles broke the prior candles low from this point onwards. So as we were coming back up, right, there was no way you could use as an M15 chock to kind of help you to give that structural signal to then get involved, right? Because you'd have had to wait for this level to go here. So when that happens, if the chock level was quite far away, you can potentially use maybe another time frame to kind of just give you a little bit more confidence as to when maybe you want to get in long, especially as, again, we're coming off that 4-hour strong low from an extreme 4-hour demand level. There were refined M15 zones within here. We had this level here, but price actually spiked just below these equal lows and swept that. So technically there wasn't any refined M15 supply was coming off. But yeah, in terms of the chock, you could drop down to say like the 5-minute. All right, and there was a clean 5-minute entry here. If you had basically viewed that as your change of character, price then takes it quite aggressively and then gives you a nice M5 entry from within here. So it's a bit more aggressive. Obviously, you're trying to trade counter M15 trend with not even an M15 chock, which I would basically not advise you usually do. But this is just kind of one other way you could get involved. In specific times like this, where essentially you're trading pro 4-hour trend from the 4-hour extreme strong low, right, from 4-hour extreme demand, literally from the very bottom. So if this 4-hour low is going to hold, it literally has to happen from here, basically. So they may be the sort of, not rare scenarios, but infrequent scenarios in which you may want to be a bit more aggressive, especially if the M15 chocks all the way up here. Use something like the M5 or the M10, and then that could have been really kind of the only clean entry I can see to want to try and then catch that move, whether you're just trying to play the M15 pullback or you're trying to anticipate that the 4-hour high low is going to kick in and the M15 may switch bullish, which is what ended up happening there. I don't believe, let's see on the M1, was there anything there you could have got involved? Yeah, so I don't think it came quite into the refined level, sort of missed that by a hair on this data feed at least. There was no confirmation entry. You would have just had to kind of take that as a risk entry coming back into this level. And then from then on, it kind of just trickled upwards and upwards. Potentially you could have got involved in that, but would that be something I personally take? No, it doesn't fit my plan. But again, this is where if you have kind of high conviction from this level and you just want to get involved, you've come back down into this level, right? This is obviously a weak high. Once we break that and then we switch bullish on this internal structure, what do we then expect? So let me explain that a bit better. And this is right where the internal frameworks come in handy. So if you view this essentially as your larger structure, prices come down into this level, we're expecting that orange higher low to form. So then once you get the smaller structure of that, obviously it's switched bearish to facilitate the orange pullback, and then that switch is bullish. Now what do we expect? Now we expect the green structure to stay bullish until what? Until it takes out that high. That's its objective, right? Once it shifts bullish, we expect those bullish structure, that bullish order flow to continue until it takes out that level, right? So maybe that can give you some confluence in which to then be aggressive and kind of take these continuations, even though it's rejecting a weak high. Not really something I personally do much, but these are the kind of scenarios, like I was saying, it's all about the higher time frame POI, where we are in the bigger story, not so much the M1 price action. If you get everything else right, then it's almost just, again, I hate saying this, but looking for excuses to get involved. Once we've mitigated the extreme, you're just trying to get in that order flow and try and anticipate that larger move. Now, In terms of the shorts, yes, you are shorting pro M15 trend, right? But like I said, you can't lose sight of the bigger picture. Even if you have that bias that you think the 4 hour low is going to go. Excuse me. Is the probabilities on your side here, right? This is a bang average POI, right? It hasn't really flipped anything, at least not recent price action. Maybe you can find something all the way over there. Not really too interested. No inducement, didn't sweep. Just about in the premium. We've come into the extreme level, and how have we come back? We've come back with a V-shaped retrace, right? So at that point, probably not going to want to jump into any sort of average M1 setups within here. Even this, it's not that great. And then I think this is after 3-4 PM BST, so not high probable areas to be looking to get involved. But this is where you want to look for at least an M15 chock when you're trading against that 4 hour demand mitigation, or even look for, you can see, right, the bullish order flow on the M15. Just quickly draw it on, and then we'll start to wrap things up. All right, range, initiation, mitigation, right? We come back into the range and then continuation. Same thing again here, right? You can see that internal bullish order flow continuing. So there's nothing massively wrong, other than the fact that in terms of shorting, other than the fact that you're shorting against this forward demand. But imagine this is just the M15. This kind of goes back to the point I was trying to say over here, right? If you're going to play the short, try and get in short straight away, in case it comes into demand level and then goes. You don't want to be looking or waiting for it to come into demand and then try and short, because it's lower probability at that point. Likewise here, right? If you didn't get in short initially in here, but then price comes into here and then it's pulling up and then you're trying to get short, you're just trying to short against this internal bullish order flow, right? Price is going to come in and now you're trying to short against that. This is that weak high and it just continues up. So this is why, if you're not sure, you're trading against demand, it's low probability, it's a crappy POI. You want to wait for that to break, get something like that, let that shift, and then at least you have something more on your side where the internal structure has then aligned itself with the swing structure, and then maybe you want to continue that down. But yeah, it's just not good to be shorting here, right? You're deep in 4 hour demand with a V shape back towards it from a very, very, very bang average M15 POI. And then from then on, hopefully you should not have taken any losses. Unless you've taken risk entries. But again, the very, very simple lesson is don't be shorting against 4 hour demand and against the 4 hour trend. So quick forecast for tomorrow. So yeah, let's keep things simple, right? 4 hours bullish. We've come into extreme level of 4 hour demand. We've had that bullish 4 hour change of character. Okay, so that's a pretty decent sign that we're confirming this 4 hour demand level is going to hold. Obviously, we're mitigating into this 4 hour supply range at the moment. So we're having a bit of a pullback. So what we can look for potentially tomorrow is price to come into this freshly created demand that caused a change of character to hopefully catch a higher low, right? And then we can get a nice movement to take out these weak highs and potentially come into this level with the potential as well. We could take out those weak daily internal highs, remember? Because that was that daily breaker structure, internal breaker structure, come into that daily low. Now potentially we're ready to continue that movement. I don't personally think that's going to happen, because this is where I try and probably unnecessarily get too tricky with my forecast. I just think of the way we pulled back to that daily premium supply, had a decent push down, a corrective pullback, another strong push down. My bias would say this is just a short-term bounce, potentially into this level of supply, maybe a bit higher, to then continue down, okay? But I have to, remind myself to keep things as mechanical as possible. I'm viewing that as my strong low. We've come into a strong level of demand. We've had a bullish change of character. We now have a fresh level of supply. So I would definitely be looking for some longs from within here. I just wouldn't be surprised if it failed, right? But I'm happy to accept that risk. So that's essentially how I'm going to play this tomorrow. Is I'm just going to assume the small internal structure will move out to take out those highs. Kind of only other tricky argument against that is you could view that as an IBOS, as that as one push down. And potentially we're only having a small change of character into this protected internal high to movement to the downside. But I'm not going to try and get too tricky with this. I'm just trying to keep analysis simple. One last thing I'll say about this as well is, even if you didn't view the 4 hours bullish, let's say some of you may have this mapped as your push down and this is your swing pullback. Ultimately we're kind of moving in this sideways range, and buying near the bottom of the range, it's never going to be the worst idea in the world, right? Even if you only get a short-term bounce, there's going to be plenty of RR, even if it's into these levels, for you to make some profits. So, okay, what I'm going to do before I kind of wrap this up is just keep my analysis super simple, because I have a habit of unnecessarily overcomplicating it. For me, the 4 hours bullish, we've come into the strong low, we have an extreme level of demand, we've had a bullish change of character, but also with a decent amount of momentum. I like that. Looking for some longs from within here to see if we can continue that up, but obviously being very aware of these levels of supply in case we do roll over and take out those lows. Looking at the M15 for me has now switched bullish. So what do we expect after a swing breaker structure? We expect a swing pullback, which we are now getting from this 4-hour range supply, and we have some M5/M6 supply there as well. So probably expecting a bit of a pullback down into these levels. So let's see what we've got here. It's extreme level of demand here. There's some mitigated pivot as well. Don't really like this one because it didn't flip anything to the left, and the range, demand range has already been mitigated. So I guess it connects to some nice inducement, but yeah, it's not my favorite. And then we've got this level here, but yeah, don't want to dive too much into 15 because we'll see how it shapes up for London. So yeah, me personally, I'll be happy to look for some longs from within here, but ultimately I won't be surprised if it fails, right, because of the overall bigger picture. So it's just about accepting the risk really, and kind of whether or not you want to trade when things aren't all aligned or not. But yeah, let's see how this shapes up for London, and just be wary of course of these other levels of supply where we may just end up being a bit more of a larger range bound market. But this is where you can just start to play the ranges from the extreme. So I hope you guys took some value from that. Hope you guys have a good end to the week. Don't force it on the last day. If you've had a bit of a slow week or whatever, wait for stuff that you have high conviction with. And we will be starting Q3 soon, I believe. So yeah, have a good weekend, guys, and I'll see you next one. Cheers.